Welcome back, and joining me for a closer look of the day's trading session is Viv Govendor from Rand Swiss Offshore. Thank you so much for your time, Viv. The markets are reaching record high after record high. So we do have the US markets hitting new highs, the Japan Nikkei climbing to a fresh record, and the JSC also continuing to clock new records. What is driving this bull market?
Yes, I mean, look, we are seeing a situation in which markets have recovered quite strongly over the last few months, especially. You consider just where we were a few months ago, like, near the end of the first quarter of the year. The recovery has been spectacular. I do, however, think there still remains significant uncertainties, including issues around, just how stable these tariff deals are going to be. I mean, look at the deal that the US did with the European Union, for instance. A large part of that was, hundreds of billions of, investment by the European Union. But the government can't invest that money. This is a private sector initiative. And how are they going to force the private sector to invest the money? And what will the US do when it's unlikely that these kind of investments come through? These are all things to be decided, I think, going forward.
Yeah. Well, Viv, let's get into the company news that came out today on the JSC. Nasper's and Process up significantly today, those shares climbing about 5% each. And of course, this on the back of 10-cent results that beat analyst expectations both on revenue and profit. What fueled this stock boosting performance?
Apparently, domestic gaming was a huge part of it, 17% growth, and you compare that to the overall 15% revenue growth, so it's slightly above that. International gaming was even more powerful, up to 35%, even though it's about half the size of the domestic gaming revenue. But still, a faster growth rate. I think the fact of the matter is that we're seeing a nice recovery coming through. And in addition to that, they also are seeing some benefits from AI as well coming through as well. And I think that is the something we have to expect going forward. In order for these AI valuations and things like NVIDIA and so on to be as high as they are, we have to start seeing real world, improvements very, very quickly.
Well, Viv, let's get into banking. Capit, one of the favorites. It released an interim trading statement today. We did see the share price at some point climbing over 2%, I think, in morning trade. The company saying that it expects its bottom line to increase by as much as 27%. And interesting, actually, that in a lower interest rate environment, the bank is seeing an increase in net interest income. What did you take out of that update?
Look, it says higher active clients, transaction volumes are positive. But you must understand, comparing, for instance, Capit to an ABSA or a net bank, we're talking about a company that's more valuable now in the stock market's valuation than these companies. But compared to like an ABSA, the market's pricing ABSA with a dividend ratio that's above its PE ratio. It's basically pricing these companies, with a significant amount of risk involved. But look at Capit, much newer bank, you would assume, new it would be a bit more risky as a prospect. PE ratio 31, which was dividend yield, under 2. Like I said, compared to an ABSA, which is where the dividend yield is actually higher than the PE ratio. And the PE ratio is basically below 7. It's an incredibly, optimistic view the market's taken. That being said, it's really played out quite nicely over the last, few years, betting on Capit over the rest of the banking sector.
All right. Well, still sticking to the banking sector, going to Nedbank that has experienced some turbulence in its share price after telling us about the disposal of its interest in EcoBank, I think last week. Nedbank making an acquisition, and this is for a fintech company called Icoka. I saw a little bit of buying activity on the back of that. Is this a positive for Nedbank?
Look, I think the scale of the purchase is quite small. So I think, for 100+ billion rand bank, this was quite a small purchase. The market is treating it even worse than, they look at ABSA, for instance. The PE ratio on Nedbank is below 7. The dividend yield is almost, 9. The market's really, we have such, great dividends, such low PE ratio. The market's basically putting a lot of risk over on your business model. I do think that, considering just what's been happening with regards to the global environment right now, with the uncertainty that's happening out there, it could make an argument that, it's possible that we could be seeing a bit of a downturn coming through. Our GDP numbers, for instance, are not being looking as good as they should be, and that's obviously feeding into the banking sector as well. That being said, when you have such cheap valuations, you would have to have a very, very negative outlook to basically justify such cheap numbers for Nedbank at the moment.
Well, before we get to your stock pick for today, Viv, let's get into Grindrod, also releasing a half-year trading statement. The logistics company saying that it expects its headline earnings per share to rise between 18 and 28%. Not a lot of color in that trading update. yeah, is there any color to fill into the details there?
But the market reacted positively today. It's up 3.7%. And over the last, it goes like 5 years, this company's done really well. But, they had a bit of a boost at the start of last year, especially after the GNU and so on. But since about the middle of last year, the market has not treated it quite as positively again. We are seeing, obviously trade, it's a huge issue here. We are seeing fears about global growth as well. They are talking about the fact that they're seeing exports under a bit of pressure. Yet they are managing to get some revenue coming in through asset sales, which is not a sustainable business long term. You want to basically be growing your revenue from like normal business activities, not really getting rid of stuff that, to earn a bit of extra cash.
All right. Well, Viv, let's get into your stock pick for today. Where are you finding opportunity?
I like TSMC. That's the Taiwanese semiconductor manufacturing company. I think with the deal that we've seen come through for NVIDIA, NVIDIA is ordering about 300,000 of its H20 chips in order to basically satisfy the demand from China. And I do think this is going to be a case in which demand from China, if anything, will be a little higher than people anticipate. Just considering just how much difficulty they've had recently trying to get on par with the US in terms of computing power and so on, because of the lack of available chips. I would suspect they would front load any kind of purchases right now from NVIDIA and other providers out there, just in case the Trump administration starts to change their minds down the line. If that's going to be happening, TSMC, the guys that make the chips, are going to be benefiting from that.
Well, thank you so much for your time and for your insights today. We've really appreciated it. That was Viv Govendor from Rand Swiss Offshore.